Tom Forte from DA Davidson, senior research analyst, is joining us. And all right, revenue, 41.16 billion. Everybody was expecting, I'm going to use the word calamity when it came to advertising. And while it is falling somewhat, the rates are falling, not as bad as the street expected, right?
So I think when you think about Alphabet or Google's earnings, less bad is the new good in the case of Google. So you had tremendous engagement. They talked about 10x Super Bowl as far as search activity for COVID-19 or the coronavirus outbreak. But the challenge is that they're not able to monetize a lot of that traffic. So when you think about Google and you think about the advertising-based business models versus a lot of the e-commerce-based business models, think Amazon, which have held up amazingly well with physical store closures. I think Google has a lot of challenges in that 4.7% decrease in GDP.
And yet, Tom, when you listen to the commentary from Ruth Porat yesterday, she seemed to suggest that the worst was in March and that things weren't getting much worse in April. I mean, you hear companies like Expedia, for example, and come out and say that they're only going to be spending $1 billion in ads when they usually spend for $5 billion. It seems like there's a bit of a disconnect on that front. I'm curious what you make of how she framed where the business is and whether you really think that ad revenue is kind of bottomed out.
So I think that we have to put it within the context. So there's a great points on Expedia materially scaling back their ad budget. But if you look at Google, the comments they made was that by the end of March, their advertising revenue was declining at a mid-teens rate, which was remarkable. So especially after a strong January and February. So the relative good news is that the rate of decline slowed in April. Now, it doesn't mean that the rate of decline will continue to slow. So what I'm trying to digest is with 26 million filing for unemployment over the last 5 weeks, how does that affect the economy going forward? And in particular, how does that affect more economically sensitive revenue like advertising revenue?
David, it's Julie here. I wanted to bring you into this as well because I know you hold Alphabet shares. I wanted to give you the opportunity to ask Tom a question if you like, but also to ask you as a shareholder what you thought of this report and if you found it as reassuring as the market has seemed to.
Tom put it perfectly. It was, better than feared for sure. YouTube and cloud revenue stood out. But I know for myself as a shareholder, I can't look at the next quarter. The next quarter doesn't matter to me. It's going to be draconian. These are numbers I've never seen in some of these companies that we're going to have to ratchet back. We just had a GDP print -4. We could be as much as -40 in the next quarter. I've got to look out at least a year for a company like Google. And Tom, I guess my question would be, let's look beyond the next quarter. What does the fourth quarter of this year look like?
Yep. So my general view of earnings for the second, third, and fourth quarter is as follows. The second quarter will be nothing short of awful, especially for those who have more economically sensitive business models. Think of Groupon, which is tied to small businesses, that indicated in the month of April, they were down 70% in the US, 80% in international. So I think the June quarter is going to be nothing short of awful. Now in the September quarter, I think you're going to have hopefully a tale of two halves. The first half of the September quarter, I think, is going to be terrible, but I'm looking for improvement in the second half, and then December to be even better than the second half of September. But all of that hinges on the economy reopening. So Adam made a great point that you're starting to see Texas reopen to some degree. You've seen Georgia, you've seen other states. And I do think that there's reason to be hopeful that things will improve. But I'm still trying to, again, digest what 26 million job losses mean to GDP going forward and what it means to 2021. I agree on looking forward to 2021, but I wonder at how many instances 2021 will be worse than 2019.
Tom, I am curious if we can remove the word draconian and maybe replace it with hope, because we're going to get Amazon earnings tomorrow, as well as Apple. Won't we get some silver linings as to where we're headed, especially with Amazon?
For Amazon, I think Target basically reported Amazon's quarter, at least on the retail side, which is going to be tremendous sales growth, but not great profitability. When you're selling lots of toilet paper, hand sanitizer, essentials, and you're not selling discretionary products, then that is a profit challenge. Now, relative to Target, Amazon will benefit because it operates a marketplace, and more than half of the products they sell are on behalf of other third-party sellers. so their relative profitability should be favorable. For Apple, I actually think there's reason to be optimistic. So they came out in April, so admittedly after the quarter, with a $399 smartphone. Now, historically, they haven't done very well with value-priced products, but I think that the setup for them is quite good. And in the case of Apple, we know from the Channel Advisor data that laptop sales are strong, with consumers working remotely and learning remotely. They're talking about reopening their stores, perhaps in May. So I'm a little more optimistic on Apple than Amazon, to the extent that Amazon has such a huge run. And I think everyone's assuming that business is, fantastic for Amazon. And I'm a little worried about the profitability.
I want to ask you a follow-up question about Amazon, Tom, because we just got some news in the past few moments that the administration has added 5 Amazon sites to what it's calling its notorious markets list. It's sites in Canada, Germany, France, India, and the UK. And the concern is over counterfeits and also over transparency of sellers, that it's too easy for third-party sellers to get on the platform without vetting, and then it's unclear to consumers who's selling the stuff that they want to buy. What do you think of that, and how much of a threat is that to Amazon's business?
Sure. So I definitely think counterfeiting is a structural challenge for Amazon. And I know they rely heavily on artificial intelligence to try to limit the counterfeits on it. They also rely on the brands reporting. I think historically Nike's reported to Amazon when they see a lot of counterfeit merchandise being sold on the platform. I do think that one of the downsides of the marketplace model in general is you saw a lot of price gouging on hand sanitizer, on other essentials. And Amazon, to its credit, tried to eliminate a lot of the third-party sellers that were price gouging. Shopify did the same on its platform. But I think those are structural challenges for Amazon and one of the downsides of its marketplace model.
David, I got to imagine you two are watching what we're going to get tomorrow from Amazon and Apple. What are your thoughts as to, or what are you going to zero in on in those reports?
Well, I own both. And I guess, for Amazon, Tom said it. It's had a monster run so far. And that's the biggest challenge with some of those fortress-like names. They held up the best, but they're also the most susceptible to a decline because any disappointment at all would likely be sold into pretty hard. Even a good number may be sold into, given how far it's run.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.